Okay, everybody, here we go. It's exhausting, this stuff. It really is. Anyway, post market wrap up on this Monday, September 25th, 2023. In case you haven't noticed, there were several times today that the MMRI went red. Red. Just at the close, it nudged back into its previous color here. But this is just not looking good. Not only that, you have the mainstream media, and when they have to cover something, it's pretty serious. So, um, I believe this was probably Bloomberg. The 10-year yield rising at its current pace is concerning. We haven't seen a spike this high since 2007. Why is it that this is happening? What's going on here? This bond market sell-off that you and I have been keenly aware of for quite a while now is accelerating. It's getting worse. As a matter of fact, bond ETFs, exchange traded funds, are getting slammed. So people are dumping this stuff here. And what are they doing with their cash? Well, today it looks like maybe they bought some stocks. The stock market did finish slightly in the green, but just let's put that into perspective. This Friday that just passed, this market finished 3 weeks of selling off. So you would expect to see something regardless of anything else. Plus, look, this as well as I know this. This is the Fed. They're intervening to a certain degree. They're buying the market. They could buy here, and they probably are. Honestly, they buy large cap stocks, prop up the market. But this problem here with the debt market, again, you got to think big. All right. This is not just a problem here in the United States. This is a worldwide debt market problem. Bond yields are rising around the world. You see what they try to do. You watch the mainstream media here in the United States. It's all fixated on what's happening here. Thank you, Tony. I appreciate that. But you got to take in the bigger picture. Why is all of this happening? This is direct result of central banks, fulfilling their end game to crush the world, to destroy the world economy, take people down with it here so they can issue in their new system of control. That's it. You all know that. Anyway, just going back here to the market. So it's okay. The Dow Jones Industrial Average at one point was down about 200 points. We finished higher fractionally. Same thing for the S&P 500 and the NASDAQ. Dollar relative strength, no surprise to you, no surprise to me at all, considers to look really pretty here. This is going to remain for as far as you can see right now. Currencies around the world right now are under pressure. This is part of the maximum saturation moment, which I have covered for you recently. You would expect to see this. The purchasing power of central bank issued notes is disappearing. Where are all the dollars going? It's a great question. Like I said, today it looks like some of it went into the stock market here. People might be hoarding cash right now, looking for things to do with it. Certainly not buying bonds with it. Thank you, V-Dog. I appreciate that. What people should be doing with it, obviously, is putting this into hard assets. You know what I've been telling you for like over 10 years now. Gold and silver, my favorite asset of all time. We're going to enter into a commodity cycle like people are not even going to believe at one point. Again, massive sell-off in the debt market, yields spiking as they are now, putting pressure on world stock markets. This is the exact scenario I've covered for 10 years. Okay. Cash making its way into commodities, suppressed assets. With regard to crude oil, we're getting a little bit of a break here. This pullback that you and I have been waiting for a while, it looks like it's happening here. Going to be another leg higher. It's going to be big. JP Morgan's target is $150. You and I have been talking about 100 plus, probably by the end of this year. We'll see where that goes as well. Anyway, as I was saying, it's interesting. When the mainstream media is forced to cover something, there's a problem. And again, we haven't seen this in quite a long time, the 10-year yield where it is. Now, I want you to understand something too. Let's put this together real quick, all right? If you were to look back on the situation here, the distortions, let's put it this way. If you were to look back at the distortions which existed in the market prior to the last meltdown, Thank you for flash news alert. I appreciate that. And then compare them to today. Nothing. It's a whole new thing. Thank you, John McAllister. I appreciate that. But so what I want you to, so even though now, since, just prior to the meltdown, the 10-year yields at about the same level, the distortions that exist are way, 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 way worse than they were then. The whole system is, we've doubled the debt since that time. The cash involved that's being sucked out of all us to service the debt is astronomical. It continues to go higher. We're inflating the debt at nearly $1 billion an hour. It's quite a staggering kind of a situation to be in. But again, let's look at a few other things here. Cryptocurrencies today, flat to maybe slightly higher. Gold and silver, of course, got hit. Crude, as I said, also fell under some pressure. This it's trying to find a new floor, in my view, going much higher. Isn't that relative strength of the dollar? It's a very bad indicator if you ask me. Most people have no idea. They see the Dixie or the comparative strength of the dollar high, and they think the dollar is doing fantastic. Oh, it's beautiful. I want to hold more dollars. No, it's totally false. It's part of the deceptions and distractions. You got to look at absolute strength. Forget about relative strength. Absolute strength is what concerns you and what concerns me, and we're seeing it with our own eyes and in our pocketbooks. The dollar and other fiat currencies around the world, the euro here, getting destroyed, decimated by their central banks by design. And of course, a lot of this is, we're paying for this war that's going to go on and on and on, and hundreds of billions of dollars more pumped into it. Of course, you know how this whole thing works here anyway. I wanted to bring up a couple of other things to you besides this bond ETF market getting just decimated today. Actually, we hit a 12-year low with regard to the 10-year yield bond ETF. Anyway, so let's put this together again. I'm flipping through these channels today, and they're floating out. I want you to pay attention to what I'm about to say. They're floating out, whoever they want. They just go out into the street. They find some poor soul, dress him or her up in a nice outfit, and they get them to, read a script. Thank you, Pelican. I appreciate that. We know this is the case. All right. Now, so they're parading these freaks out to try to convince you and me, to try to convince us. Again, this is part of the deceptions, the distractions, the look here, the look there that you and I have come to recognize here. They want us to believe that the Federal Reserve really isn't sure about how their monetary policy is going to work. In other words, it's a guessing game. This is a complete lie, okay? The Federal Reserve is exactly certain of what they are doing and where they are pushing all of us, leading us to the slaughter. You and I have nailed this to the wall since it started, with the raising of rates being an absolute farce. This whole thing is only to cut off credit to people. The economy is in free fall. You know all this. But again, they're going to try to convince you that what you're hearing and what you're seeing and what you believe is not real. Okay, you got to believe these freaks that they float out over there over and over again. Here's something else I want you to pay attention to. How many of you are even aware of this? The Federal Reserve, thus far, has bought nearly $3 trillion of mortgage-backed securities. What does that mean? What does it mean if the Federal Reserve is in here buying trillions of dollars of mortgage-backed securities? They're creating a fake market. They're creating a market that shouldn't exist. They're artificially propping up housing. Again, if the Fed were not in here buying literally nearly $3 trillion worth of mortgage-backed securities, do you think the price of housing would be where it is right now? No. They've gone out of their way to inflate, as you know, a stock market bubble beyond anyone's wildest dreams, a real estate bubble, which we haven't even seen the ugly side of this. And I'm talking about commercial real estate. We're going to talk about that down the line as well, too. And the other thing that I want to talk about with you, and we've been touching on this, more hedge funds are jumping on board with regard to betting, taking out large bets that we are going to have a meltdown in the debt market. Honestly, you and me, we have been on the cutting edge of this for I don't know how long. Okay. We started talking about this before anybody else. That's really the truth. Check my old videos, go back as far as you want to go. All right. Now, all of a sudden, it's, this is what people are talking about here. All this stuff people said was never going to happen. Oh, never. No, never. It's all going to be beautiful and lovely. You know that because they're telling you. But now we have more and more hedge funds here taking bets against the debt market. They're betting on an implosion of the debt market. Michael Burry, dude, if you're watching this, your timing has been impeccable. Getting short this market. It's an incredible thing. You nailed it to the wall. Honestly, you, sir, nailed that one to the wall. Absolutely. Anyway, look, I'm sitting here talking to all of you, all my friends. Magic Mika's here, Alan Greenspan here, all of you. Where's Lava Girl? Is she here? She's got to be here. Lord Humongous, where's he? Come on, everybody. Anyway, I want Axiom Curbs here. Everybody's here. I love it. Anyway, yeah, yes, Alan Greenspan. Look, dude, you know this. Bank runs are going on. You're not allowed to know this is happening, although it is or was at least getting reported on the mainstream financial channels. People are pulling their cash out of these institutions at their fastest pace ever, but you're not allowed to know that. Again, if it just for a second, imagine if CNBC started broadcasting that people are pulling their cash out of these institutions at a record pace, what do you think people would do? They would panic. They would run into every single bank you could dream about, even ones they're not talking about, and they'd pull their cash. This would create a monumental problem for the financial system. It's already a dead man walking. Okay, these things. They're insolvent. They operate in a complete state of insolvency. Your cash isn't there. And I've been telling you for the longest freaking time now, get your cash out. Do this before everybody else does. Be first, be smarter, or cheat. We don't cheat. So we're going to be first or smarter. You understand? That's what we're going to do. I've been telling you this for the longest time. I don't know another way to put it. Yes, if you need to keep some cash in these institutions, you keep what you need, and that's all. Yes, credit unions are safer. Why? Because they don't take risks as the major banks do here. You understand? And they don't have any derivative exposure either. And that is another time bomb on a scale that is beyond anyone's wildest dreams. I think most of you are well aware of this stuff. Just for your own fun, okay? Just let your fingers do the walking and just look at the top three banks, Goldman Sachs, JP Morgan, and Citigroup. See what their derivative exposure is, okay? It's all around $150 trillion each. It's unbelievable. But that's kind of where we're at, and I think you all know that anyway. That's pretty much what I wanted to cover here today with all of you people. Keep your eyes on this, okay? This is not pretty. I don't know if the MMRI, as I am doing this, is back in the red. Can someone check that for me? I'd appreciate it. Or if we drop back down to like the amber color, whatever it is. Last time I looked at it, it dropped back down. Anyway, as I said, look, without direct intervention, I'm not saying I want this because you see, people, when I say it's 290, all right, so we're probably not red, right, Magic Mika? We're probably just under red. 299, I think, is where it turns red, or maybe it is. I don't even know. Red is my eyes. I love that. Anyway, look, we got this covered. We know what we're doing. We're taking action. We are not sitting back and doing nothing. And that's what's important here. Okay. Understanding the situation, staying aware. Thank you, Robert. I appreciate that as well. Anyway, that's kind of where we're at. What else can I say? Nick the Pig. Yeah, I haven't seen him. I wouldn't be surprised if they float him out. Look, like I said, the Fed needs to take action to stop this from happening, but it's not going to be enough. No, they want this thing to come down. I think we're pretty much on the same page here. This is what they've been gearing up for a very long time. They need a public outcry on an unprecedented scale. Save us, please give us a solution here. That's what's being set up here. I mean, it's so obvious to me, and I am sure it's obvious to you too. This is what they're going to do, especially in light of this legislation that just got put forth, preventing the Federal Reserve from issuing a central bank digital currency, for which, whoever put that forward out of it is some clown, doesn't realize the system is already 99.9% digital. Okay. Maybe they got a little involved here. This is, re-election campaign, whatever it might be. It's all bullshit anyway, because what's going to happen. This guy and everybody else, unfortunately, is going to be on their knees begging for a solution when the current system melts down. And this is happening by design. None of this is by freaking accident. Right, Spencer? Thank you, Spencer. That's true. Everybody here knows that's true. Wow, thank you. 705 thumbs up. I can't. Yes, exactly. Unfreaking bank yourselves, people. Thank you, Finsko. I appreciate this. Bring this stuff up. Talk about it. You don't need to be a slave to this system. Sidestep it. Number one, get your cash out. Keep only what you need in there, and that's it. Put it in a credit union. These places are safer. All right. If you need to, participate in this system, well, put it in a credit union. Okay. That should at least help you out. Or if you have to keep it in a major institution for whatever reason, the minimum. The rest, find another place to put it under your mattress, convert that into hard assets, something along these lines. You all know this, right, Dave? Lava says obey. Lava is awesome. Where is she? Is she here? What's going on? Anyway, people, oh my goodness, over 800 thumbs up already. I can't thank all of you enough for so many things. Listening to me, a lot of this is, none of this, not one word is scripted ever. All right. I write some stuff down with this disgusting handwriting, and I sketch out what I want to talk about, what I think is actually important. And the rest of it is just you guys. Like I said, this isn't just me. No, Ryan, you didn't miss the party, but it's getting close. Wow. We're almost at 1,000 thumbs up. You guys are amazing. Absolutely amazing. Yeah, sure. I'll go on anybody's show. I'm pretty easy. You know that. That's another thing. Just real quick. Let me give you a heads up. This week we're going to be all right, but next week I'm going to need to take a day or two off. I know it's no good, and I don't like to, but unfortunately I'm going to have to. I'm moving out of this place here. This is Airbnb that I'm renting. This is in Sarasota. Moving over to Bradenton here, and I'm going to need to take a few days off here or there. I promise you I will keep it at a minimum, because I think we're at a critical juncture. We need to stay on top. But look, you and I have been ready for this, people. Wow, over 1,000. Nobody, not one single person that follows this blog, and and tell me if I'm wrong. Please, someone here tell me if I'm wrong. We're all ready. We're all prepared mentally, physically, spiritually. We know where we're going with this. We know who our enemy is. We know what our enemy wants. We know what they're doing to achieve their goals. So we take counteraction. You understand? Period. I don't know another way to put this. All right. So what we're going to do, this is getting kind of long. Let's maybe cover a couple of more questions here. Yes, absolutely. USO, you want to get involved in crude. I put out a whole list, people. Just if you subscribe to my free newsletter, all right, if you have not subscribed yet, please do. There is a link in the description of this video. I put out all the information you need, what exchange traded funds you need to look at, what ticker symbols you need to be looking at here. Again, I put out this information for all of you, but you got to do your own research. You got to understand what you're looking at. All right. And if you want to get involved in commodities, there's all these exchange traded funds that will give you access to these. I think you should look at a broad basket of these things here. With regard to crude oil, yes, there are many ETFs that you can look at here. Energy as well, a whole bunch of stuff, ways to gain exposure to this stuff. I get it. Believe me. JEPI, I'm still in JEPI. I intend on holding it. I want to buy it cheaper. I really do. Market volatility is good for this fund. It generally pays out more. It pays out per month. There's another one, PDBC. People, you know all these things. Yeah. I'm looking forward to getting to the new place, because this light behind me is really annoying. I know a lot of you don't like it anyway. No, I will not be at the Silver Symposium. I don't know who put out that I would be there. I apologize for that. I don't even remember if I got an invite, to be honest with you. There's so much going on. All right, look, so what we're going to do is I'm going to close this video. Thank you all. Thank you, Melanie. I appreciate that so much here. Over 1,100. This might be a record. Lava would know if she was here. I don't know what the record is with regard to thumbs up. And I appreciate it like you cannot believe. People, thank you all so much here. Yes, this is a rental here. I had to rent this Airbnb as my house gets built. All right. Sold my house in Vegas. It sold in a day. Couldn't believe it. Anyway, I couldn't buy the Airbnb here, but I am buying another house. All right. Anyway, that's it, people. That's all. Thank you again. Thank you for support. Thank you for your friendship. Thank you for everything. And thank you for those thumbs up. They are so important. Please share this stuff. Get it out there. Talk about it. And I will see you all in the morning. I promise. All right. I'm out of here.